Good morning, everyone. Thank you for taking the time to log into this meeting and presentation. My name is Peter Jablonski. I'm from the city's Contract Monitoring Division. And today I'm presenting with John Miller from Meriwether and Williams Insurance Services and my colleague, Cornell Mikes. Today's presentation is going to focus on helping LBEs getting pre-qualified with primes. We decided upon this topic after talking to several LBEs who expressed some frustration with the process of how to effectively link up with primes. Before we get to this, I wanted to briefly introduce the CAP program, which I administer for the city. CAP stands for the Contractor Accelerated Payment Program. And what we do is provide working capital loans of up to $250,000 to certified LBE contractors who are awarded city jobs. This is a program for LBE contractors, and it is only for city jobs. So if you're bidding on a city job and you think you have a chance of winning it and you anticipate needing working capital, you should reach out to myself or Meriwether, and we will help guide you through the loan process. The loans are fixed at 5% interest rate and are paid back through the contract at job completion. At this point, I'm happy to take any couple questions about the CAP program now, and then of course during the presentation we will intermittently open it up for questions, and then of course at the end we will also open it up for questions. So if anybody has any questions at this point about the Contractor Accelerated Payment Program, I'd be happy to answer those questions.
Hi, Peter. Thank you so much. I can help regulate the questions as well. I don't see any questions coming in at this point, but just like Peter said, if you have any questions, feel free to raise your hand or type them in the chat or Q&A features at the bottom, and I will be happy to unmute you and you can ask your question. So thank you so much.
Okay, great. Okay, so then at this point, I think I will now hand it over to John Miller from Meriwether.
Very good. Thank you, Peter. It's a pleasure to be here today. And as Peter works as the CAP program administrator at CMD, I am the CAP project manager. I'm warehoused at Meriwether Williams. I'm responsible for working with our contractor development team and pre-qualifying contractors for the CAP program. I also do the underwriting. We originate the loans, we monitor the loans, and work through the process with our borrowers. Today's program, of course, is on pre-qualification, which is a major touch point in local business enterprises' relationship with potential prime contractor clients as well as project owner clients on a direct basis. In the span of my career, pre-qualification has taken on a whole new meaning, even going back to the 1980s. There was significant prime contractor default during the course of the 1980s, and the need to pre-qualify and to mitigate their operational risks became apparent. And in fact, effective pre-qualification became a criteria for qualifying for surety bonding capacity. And we saw the pre-qualification requirements imposed on prime contractors being even further enhanced in the 1990s with the advent of subcontractor default risk insurance, where part of their qualifying for that type of insurance coverage to manage subcontractor default requires very effective, robust, and continuous pre-qualification of subcontractors. So prime contractors, of course, in today's marketplace and public entities are requiring pre-qual in order to mitigate operational risks. And those operational risks basically break into three categories. Risk associated with the skill set that the contractors that primes hire to do various divisions of work on these projects have, their financial position, and their track record of success. The goal of pre-qualification, of course, is to ensure that accurate information is compiled and evaluated in a way which allows those subcontractors to make responsible for selecting subcontractors to make sound business decisions. So that's a bit of the background on pre-qual. Now, our extended team at Meriwether are my CDP colleagues, both on this side of the bay and over in Alameda County, have done some extensive research on what is common in terms of pre-qualification criteria. They've developed this matrix that includes input from the Pankow Group, Clark, Swinnerton, Webcor, Turner, just to name a few of the major local prime contractors that you encounter here in this market. And the dots in the matrix just point out that there is a consistency amongst these firms in requiring experience modification rate information as they pre-qual. I'll talk a little bit more about EMRs later. OSHA 300 reporting records as part of the pre-qual process. They're obviously looking at your safety program, details on the types of work that your firm does, of course, as part of pre-qualification, vital statistics on your firm in terms of largest projects, largest aggregate work programs, so on and so forth, and legal details. They're very interested in your history in terms of defaults or litigation associated with the work that you do. Obviously, details on your bonding capacity. They're going to ask for financial information, and quite recently, I'm seeing an emphasis on work in process or work in progress information as part of the financial disclosure that they're requiring of local business enterprises. Just a little plug for the CDP program, and I'll talk about this a little bit later in terms of what is offered through CDP, but your ability to present those financials in the pre-qualification process and explain what they say is, I think, essential to successfully pre-qualifying with prime contractors. And of course, they're going to look for evidence of your certifications in business and your project history. Okay, so safety records. Can you demonstrate a solid safety record, both at the overall company level, okay, and on specific projects that you've been involved with in the past? The OSHA 300 reports, this is a report that essentially identifies claims activity or injury activity, where it occurred, when it occurred, the name of the employee, how the injury was sustained or illness was occurred, days off work, days on light duty. These reports, I'm understanding, are posted typically by February 1st, and they reflect essentially your loss history over the immediate prior year, and they're required to be posted until April 30th of every year. I think a lot of prime contractors are looking for a series of these reports as part of the pre-qualification process. If you're new in business, you may not have a long track record, but to become familiar with OSHA 300 reporting is an essential part of the management of your business. Now, the experience modification rates essentially are established by the NCCI, that would be the National Council on Compensation Insurance. All insurers that provide worker compensation coverage will use NCII EMR rate modification as applied as a metric, if you will, to the rates that they charge for workers' comp insurance. Now, this is a really, really important thing, and that EMR rate is reflective of your loss history. A rate of 1.0, sort of a neutral rate, might be a starting point. But as you manage your business from an overall safety standpoint, over the long term, you can get that EMR down below 1.0. And the difference between a 0.85 EMR rate and a rate that would be reflective of having some significant losses, like say 1.4, is about a 50% impact on your work comp rate, your base rate, which if added, of course, to your payroll as part of your labor burden is a significant swing on the cost that you're going to be having to pass along to prime contractors and project owners on your comp program. So as low as you can get your EMR based upon great safety management is really the name of the game here. And we do have, as part of our contractor development program, very excellent in-house safety consultants that can work with you and help you position yourself with programs and strategies to really have a world-class safety program in place to be able to take advantage of all of that. Again, written safety plans are essential, we think, to the management of your business. And then, of course, job-specific safety plans are typically put together in cooperation with the prime contractor.
And now,
Okay,
John,
yeah, go right ahead, Peter.
You think we should see if anybody has any questions about that before we keep going?
Hi, thank you. There's no questions at this moment, but we would like to open it up to questions. So if you do have one, please do type it in or raise your hand at this moment, and we'll be happy to answer. Oh, and here we go. One question is the availability of the CAP loan limited by the amount of the loan per person or the number of CAP loans doled out, or both?
The CAP loan is, I'm not sure I fully understand the question, but the CAP loan is limited to $250,000. And of course that has to be less than the value of the contract to the LBE, and that the money is to be used for materials, supplies, and it can be used for payroll as well.
I'll add to that that the $250,000 is available per contractor, per project, and as Peter says, the $250,000 is available to cover the cost of your early work for direct expenses of payroll, materials, equipment. We're even able to cover, in some instances, and that's at least a rented equipment, not equipment purchases. But consumables can be covered as well. And then, of course, we will also cover your indirect attributable expenses to the project in the form of overhead. And so that's essentially how it breaks down, yes. Hopefully that answers the question. We kind of tag teamed that one.
Thank you so much. Oh, thank you so much. We do have a raised hand, so I'm going to go ahead and unmute you right now. All right, so with LaSonia Mansfield, I asked to unmute you, so go ahead and unmute your mic and you should be able to talk.
I apologize. Hi, everybody. I think I raised it by accident. Hi, John. No question.
No question. Oh, okay, very good. No questions. Well, it's great to have you here, LaSonia. Thank you for participating today. We'll move on if there are no other questions.
Okay. No questions at this moment. Thank you so much.
Okay, so moving right along. What information is required to pre-qualify? Well, typically the pre-qualification is a form of application where you're giving an overview of your business. I think that's pretty obvious. You're going to be asked, this is very similar, by the way, to applying for surety bond credit. It's an examination of your background and organization. It's going to be an examination of your finances. We'll talk about that in a minute, but you're going to be asked to list the largest project you've successfully completed. You're going to have to be able to talk about the largest volume that you've completed, largest backlog of completed work. And it's helpful in talking about your backlog to not only be able to list the largest value associated with signed contracts, but what you typically are carrying in terms of a cost to complete backlog. Because you may have a long list of signed contracts at any point in time, but your cost to complete backlog on those signed contracts may be far less than the overall value. That could have an impact on the prime contractor's assessment of whether or not you have enough capacity to take on the job that they're intending to award. So that's an area, again, with our contractor development program, we can focus on with you to make sure you know how to navigate questions that are asked, in that context. Obviously, your project history is important. References from your sub-subs or suppliers or prime references. Resumes on your key personnel and number of employees is also part of the criteria. When we talk about financial information, here again, we're following sort of that same template that a bonding company would ask for. They're going to ask for copies of your financial statements going back as many as 2 to 3 years if they are available. They're not so concerned that the financials are prepared by third parties, like, for example, CPAs, but they are concerned that the financials meet a basic criteria in terms of being comprised of a balance sheet, profit and loss statement, very often with a work in progress or work in process tie-in that would sometimes be referred to as a work on hand schedule. Those financials also ought to be submitted on an accrual basis as opposed to a cash basis, because accrual basis accounting positions you much better in terms of recognizing the full working capital position of your company and the full revenue and earnings position of your company as you're representing that as your financial picture for prime contractors. They may ask you for a separate breakdown of accounts receivable with an aging and evidence that you have a bank line of credit in place. We're also, with the CAP program right now, on a case-by-case basis, we have spoken to prime contractors about the availability of CAP funding for a local business enterprise, whether or not they have participated in the program or would be a candidate in the future. Any assurances that we give in that area are subject, of course, to current underwriting criteria. It's not a you will get a loan through CAP kind of a conversation that we have, but just as you would demonstrate that you have a relationship with a bank as part of pre-qualifying, it's perfectly reasonable to indicate that you have a relationship with the CAP program. Okay, so background information on yourself as the owner of the company. Evidence of whether or not you've been involved in any kind of bankruptcies or business failures, or whether or not you've been terminated on a contract, is very likely going to be asked to be disclosed in the pre-qualification process. Any suspensions or disbarments, outstanding judgments, and past 5 years of litigation, as I mentioned when we were talking about the pre-qual matrix. Also, your bonding. Do you have a letter of bondability? And it's just as I was describing in terms of a relationship with a bank or with the CAP program, letters of bondability are not guarantees that you have bond credit available to you. They're more of an indication that, subject to current underwriting criteria, your bonding company is familiar with you and you're demonstrating that you have a relationship established there as part of the pre-qual. Proof of insurance. These would be certificates of insurance, the content of which are going to be dictated by the individual prime contractors, either on an overall basis or on a specific project basis. Those insurance requirements are very often pushed down from the prime's contract with the owner. But you would be demonstrating that you have general liability, worker compensation, and business auto as an example. I mentioned earlier outstanding judgments or claims against your company and litigation history. They're also going to want to make sure that you're in regulatory compliance in terms of being properly licensed with the state, properly certified with the contract monitoring division. At this point, I would ask my colleagues from CMD, is there anything with respect to certification with CMD? I know a lot of the folks in the audience today might already be certified with CMD, but is there anything about that certification that you'd like to comment on?
Yes, ma'am.
Hi, John. Thank you. This is Conan Mikes. I work on the CMD side of things. I assist with the alias, and if you have any certification questions, go ahead and ask them now. I might be able to answer them.
Hi. Yes, so please do ask any questions. Feel free to raise your hands and type them in the Q&A. As of now, there's no questions at the moment, but if you do have questions, please utilize these features. Thank you so much.